Welcome again to my YouTube channel. I want to look at classification of accounts. The other time in my earlier video, I talked about what bookkeeping is and how we record transactions in our books. Now today I'll be looking at various classifications of accounts, because lastly I talked about what an account is, and I said an account is a record of a transaction in the books of, and it appears in a capital T. So, and it's always recorded in a book. And in that book today I'm mentioning, it's always referred to as eventually as a ledger. So a ledger is a book in which we open the accounting or the accounts. So any page in that book will be considered to be an account, which will always have a capital T appearance. So under classification of the accounts, we have the basic, where one, they are classified into the main two, either personal or impersonal accounts. So personal accounts are those accounts which are in the names of persons. Accounts which are in the names of persons, we refer to them as personal accounts. Now, the examples of persons, of course, we have either a company name, like maybe Kenya Seed, or a name, maybe John. Those are the names of the person. So a company will be an artificial person, and a natural person is the name John. So that's what we talk about now, personal. So when we have an account relating to John, maybe we sold goods to John, then you open an account and then indicate the name of John at the top there. That's one of the personal accounts. Or we bought some items to Kenya Seed, maybe seeds. Then you'll open an account and indicate their Kenya Seed account, the name of that person there. Now the next one, under the same classification, is the impersonal, which is now the other side of it. The impersonal accounts are now persons or accounts which are not in the names of persons. So these are not individuals. They are relating to non-individual identification. Then those are out of the impersonal accounts and not in the name of person. Like for example, a motor vehicles account, meaning a transaction relating to a motor vehicle, then that's not a person. Maybe we talk of purchases. That's a procedure. We bought items. That act of buying is not a person, so it's an impersonal account. We have cash, it's not a person. Expenses, rent, salaries, all those are now not relating to persons. They are the impersonal accounts there. Now the other classification is either if they are real accounts or nominal accounts. Now real accounts are those accounts which relate to items which are tangible and they are visible. So items you can see or you can touch. Then when opening accounts, then they will be represented by the nominal accounts, or the real accounts, which meaning they are actually real. You can see them, you can touch them. So they are real accounts there. So motor vehicle is an item you can see, you can touch. So when you open an account, you indicate their motor vehicle. Then that's an impersonal account, but a real account. We have cash. It's money, you can see it. That's actually a real account. Stock, those are items which are for resale. You can see them, you can touch them. Vehicle or furniture, buildings, those are items which you can touch, you can see, so they are considered to be falling under the real accounts. Now the other part of it is the nominal accounts, which now are accounts which are relating to items or those things you cannot see, you cannot touch them. Maybe it's a service or an act. Then those ones there, they are considered to be in nominal accounts because you cannot see them, you cannot touch them. Like purchases, it's a process of buying. Not the items, the process of buying. That is purchase account, which will be a nominal account. It's not touchable, you cannot see that purchase process. Now, sales is an act of giving out items and then receiving cash. That act, you cannot see it, you cannot touch it. That's a nominal account. Maybe an income, maybe commission. You sell items for somebody, he pays you some amount as commission. That's actually not visible, not tangible. So that's actually a nominal, which is actually a nominal account there. So those are the classifications that you have there. And then now, under this also, we shall have the classification under the real and the nominal accounts. So we have under the real accounts, we have either they are assets or they are liabilities. And now under the assets, we say the real accounts, which are assets, either are non-current assets or current assets. Non-current are those assets which are fixed. We always, in the past, used to refer to them as fixed accounts or fixed assets, meaning they last in the business for longer than 1 year. Those only say they are actually fixed assets. And then the assets which are not lasting for the business for a long time, we refer to them as current assets. In the most recent terms, we refer to them as current assets or non-current assets. So fixed assets nowadays we refer to them as non-current assets. So current assets are those which last in the business for a short time. Like money, you can have money today, use it to buy items. The money is gone. The way following day you sell items, you receive money. It comes in, so it keeps changing in out. So it's there, it's not there. So those are the current assets. They don't last for long in the business. We have debtors, persons that you sold goods to on credit. We are going to talk of as debtors. Tomorrow we pay them, or they pay us, not to pay them. They pay us, meaning we no longer have them as our debtors. They have paid the money, so the debtors will not be there. So they last in the business for a shorter period, and then they go. Also the creditors, these are persons that actually we bought goods from on credit, we have not paid. They are considered to be creditors. So whenever we pay them, then the creditors are no longer there. So they are considered to be shorter in the business. So they are considered to be current assets. So all of them are tangible, but only that they are not either lasting in the business or they are lasting in the business. They are lasting, fixed assets. They are not lasting, current assets. So that's the classification there. Nominal. Under nominal accounts, we say these are not tangible, they are not visible. Like purchases, like sales, like incomes, like all the others. So when you're talking of now the nominal accounts, they are classified into two, either incomes or expenses. So expenses are those accounts through which we spend, we pay out money. When any airline through which you're paying money that's actually meant to generate an income, we talk of them as expenses. Like salaries. We pay guys to render services to us, to help us run the business. That's an expense. We are paying out money for them to render service. We have like rent. We've taken a building, we want to use it for generating an income. What we pay, the owner who's giving us an opportunity to use his building is actually an expense, which is termed as rent. We have transport. We hire a bus or a lorry to carry our goods from the supplier to our premises. We are paying out money to get the goods transported to our premises. That is an expense. I've said when you render some services to somebody else, maybe you have sublet or you have some building somewhere which you've given out to people, they are paying you some income. That's what we talk of as rent income. Through them you are receiving money. It's an income. So under nominal, we have either the incomes or expense as classification there. Now I've talked of now under the personal accounts where we have either debtors or creditors. Under the personal, we have the names of persons under personal accounts. Debtors, we shall have the names, John's account, we shall have Wazir's account, we shall have Nasir's account, we shall have Mike's account. These are debtors. Or we can have Mary, Wilfrida, or James. Creditors, those that we bought goods from on credit, we record the accounts in their names. So those are not personal accounts which are either debtors or creditors. So that's under now the personal accounts. Now in personal accounts, there was I've talked about the real nominal, and I've said under real are those which are tangible and you can see them. And then the nominal are those which you cannot see, and then you cannot touch them. Now we have assets. Assets, as I was saying, they are either fixed or current. That means non-current or current. Non-current are the fixed assets. Current are those which don't last in a business for a long time. So examples of the fixed asset, non-current assets are motor vehicle. These are machines which you use for transport, automobiles, which you use to transport goods or to transport persons to place of work or to supply the consumers or from the supplier to our premises. These are vehicles. We have machinery. These are equipments which actually do work in the company, either in the factory or in the offices or in any area, so long as they are making work easier on top of the machines. Buildings. These are premises, buildings which have actually been put up to help either provide a space for work or for the storage of goods, that's warehouses, or maybe godowns for goods which are ready for export or for sale. These are actually we talk about buildings there. They're necessary in the business. Furniture. These are equipments or items which are used in the offices to provide either seating or storage of stationery and all those. Those are considered to be furniture. Goodwill. Goodwill is actually the good name that a business has in the eyes of the consumers or customers. That's the good name. A reputation that a business has normally is developed over time. You report it from someone. Someone has run a business for some time, and then he says, I'm selling to you, and then you pay for having generated these customers. Persons that will continue being your customers when the owner has gone away. Those are what determine the value of the goodwill. When you're buying it, then you didn't create it. But if you have it over time, then you created that goodwill which you can value based on how much you sell more than any other person who is in the same business. We say that's goodwill. So it can be a purchase of profit over a certain number of years, meaning you've been making profits which are higher than all the other person who is in the same business, in the same market. And that extra profit you're generating or sales is what we call now as the goodwill. So you can value it and then you put it as part of now your assets. Premises, I've talked about the premises here, which can either be rented. Most of the premises are actually going now if they're freehold or you actually bought them from someone. As fixed assets or non-current assets. Now we have the current assets. The examples of current assets are the stocks. These are items which you bought for a sale. We call them stocks. Items which we buy, we're going to sell. Like clothes, you bought a bell, second-hand clothes, or you bought some new clothes from Rivertex. You're going to sell in the market or in the shops, and those will consider them to be stock. So the items themselves are stocks, but the procedure of buying is sort of as purchases. So those are items non-current because they're not lasting in the business for long. You're buying them today, even you can sell the same day. So they'll no longer be there. You're supposed to buy more. Cash. This is the liquid, the money, which is in the business, which is you're going now to use for running the business, purchasing or paying expenses, paying for items which are supplied, electricity, water, all those. This money is needed for that. That's what we call now as cash. Bank is any amount that the business has in a bank account. Any money that the business has in an account or in a bank account is what we call as bank balance. So that amount there is what belongs to the business, and eventually a business will use it to generate more income. So somebody can have money in the bank and say, now this one I'm going to use it to run my business. Then that will form capital that you'll be using now to generate the trade or the activity that is doing in his enterprise. Debtors, as I've said, these are persons that we sold goods to on credit. They have not paid. They say, I'll pay tomorrow, I'll pay after a week, I'll pay after a month, or after 6 months. They have not paid us, so they owe us money against the goods we sold to them or service we rent them. That is actually of us, debtors. They'll be always identified by their names, and there's always saying those are now the personal accounts. You also have prepayments. Prepayment is where now you rented a building from the landlord, a person who owns a building. You take a building, you want to use it for business, and then you agree with him that I'll be paying this much every month or every year. Now, a year comes to an end, then you've paid several months ahead. You find you have some overflows, you have some extra cash, and you make your decision as the entrepreneur that let me pay several months ahead so that when it starts January or 2 months or 3 months in the next year, I'll not have the hassle of having to look for rent for the building. Then that extra amount you've paid beyond the period you're supposed to is what we call as prepayment. Paid before the time it's due. You also have what we call as now accounts receivable. Now, account receivable is actually any amount that is due to the business. It can be a service or it can be for goods, but any amount that is due to a business, any amount that somebody ought to have given us or paid us, but he has not done that, then that is what to talk of now as accounts receivable. So it can be even in bill of exchange, but the bill of exchange is any document you've agreed with one that he owes you money, and he gives you a note to confirm to you that he'll pay you some money that he owes you after a certain period of time. And that's what we call as the bill of exchange. Now, bills receivable is actually the same thing, which falls under that. That's it for the current assets. We have liabilities. Liabilities are claims against the business. Anything that belongs to an outsider, either he sold to you goods, or he rendered a service to you, or he did some work for you that you're due to pay that person, or have not been able to pay, is considered to be a liability, or have agreed that you will pay. Still, that one is considered to be a liability. Now, liabilities are categorized into two again. You have the long-term liabilities and the current liabilities. So, long-term liabilities are those which are payable after a longer period. Meaning you are given a duration, a longer duration to pay, like more than a year for you to pay. Basically, in account, we consider more than a year, it's considered to be a long-term liability. Like a 2-year loan or a 10-year loan that's given by the bank or a financial institution, that's a long-term liability. And then it can be maybe also a debenture. As a debenture is this now of relating to companies where persons or individuals give loans to a company. So these loans are given to a company, they are considered to be debentures, meaning you hold a certificate that you've given a loan to a company, and that's considered to be a debenture, which is due to you on maturity on the time that you've agreed that it will be payable to you. So before it's paid, it's considered to be a liability to that company. Now, the current liabilities are those which now are due within a shorter period, within a certain accounting period. So accounting period always says 12 months. So any amount that is due to us, an outsider or any other person that is due and payable within an accounting period is considered to be a current liability. Now, current liabilities example is the creditors. So creditors are considered to be current liabilities. These are items or relate to goods that you bought to a supplier. You bought sugar, you're going to sell, but you agreed with the supplier, Mumias or any other Horon or any company selling sugar, that I'll pay you after a month or after 2 months. Then within that period that you've not paid Mumias, that is considered to be a liability, which is a current liability. And that Mumias will be considered to be a creditor to you, a person who you owe money, current liability. Bank overdraft is another current liability where the bank has given you facilities to be able to take more from them whenever you have financial issues, and then you pay whenever you make subsequent deposits. It's considered to be a bank overdraft, meaning you draw more than what balance you have with the bank. Those are facilities that the bank gives to individuals or customers. Then that is a liability because you have money that you've taken from the bank that you've not paid. That's a liability which will always be recovered whenever you deposit any cash with them. So we also have short-term loans. Can be given by a bank a loan which is only for 8 months or 10 months. That's a loan, but it's actually short-term. It doesn't go beyond a year, and that's supposed to be a current liability. We also have what we call now as accruals. Now, accruals are amounts which relate to any expense or any dealing that you've not paid within the required time. You agree that you're paying rent on a monthly basis. but the rent for this January you have not paid, why you are in June, in February, or in March. So meaning 2 months' rent is in arrears, has not been paid. That's considered to be an accrual, an unpaid amount, which is also a current liability, because you're required to pay within that short period there. And then also talking of us now, bills payable. Now, bills payable is a bill of exchange, which you have agreed with one. You owe somebody some money, and then you sit with that person, or you agree and write him a document confirming to him that I'll be paying you your amount in the next 3 months. Always normally around 3 months. That I'll be paying you the money in 3 months, what we had agreed, or it's negotiated. Meaning now it has been negotiated to another person that will also you owe money. So within that period that you've not paid that amount that has been, you have written a bill of exchange to that person, is considered to be a current liability. So these are items which appear in what we talk of as a balance sheet, and they are either current liabilities, or long-term liabilities, current assets, or non-current assets. So we actually be talking about them when we come to preparing what we talk of as a balance sheet. It's a statement which shows the financial position of a business on a particular date. So it will be encompassing assets and liabilities. And the outcome of this is what we recognize the equity, what the business is worth. I'll be talking that in the next video. Thanks so much.